Welcome to Kryptonite. My name is Ife, and in this video I am going to show you how to identify different trading chart patterns. These are common patterns that you can see when you are doing technical analysis in the price chart. Chart patterns can either be in a bullish form or in a bearish form. I am going to show you how to identify these patterns and how you can use them in your trades. This right here is an overview of different chart patterns that you can see when you are doing technical analysis on the price chart. Double top, the head and shoulders, the rising wedge, the falling wedge, the descending triangle, the ascending triangle. You can find a bull flag and also a bear flag. I am going to show you how to identify these patterns in the price chart. Right now, I am on the Bitcoin USDT price chart, and this is the 4-hour time frame. When looking at the price chart, you can easily use your knowledge of identifying support and resistance. You are meant to use that knowledge to also find different chart patterns in the price chart. Now, for example, when you look at this price movement, you can easily draw a particular chart pattern that would help you in your trades. For example, if I bring out my trend line, I can easily draw a resistance line from this point all the way to this level. You can see that this is a slanted resistance line all the way from this level to this level. Right here, when the price touched this line, it got rejected. Also at this point, rejection, and as you can see, it gets rejected when it touches the line. This is the resistance in this price chart. Now let me draw a potential support in the price chart. If I go over from this level also, I can easily draw a line right here. You can see that this is a slanted resistance to the downside and also a slanted support to the downside. This right here is called a falling wedge in trading, and it is usually a bullish pattern. Bullish pattern in the sense that it usually breaks out to the upward direction. Now you can see that after the completion of this pattern right here, the price broke in the upward direction, confirming this bullish pattern. And soon after, the price continues to go in the upward direction, as you can see. Now this is one pattern which is called the falling wedge. Now let me show you another pattern which is called a bull flag, and this is a very common pattern in the price chart. After a breakout from this level, the first thing will be to identify the potential resistance, which can be this line right here, and also find a potential support. This would be the potential support in the price chart. Now when looking at this, you can see that I can easily bring out a bull flag from this chart pattern. Let me remove this previous pattern so you can see this clearly. Alright, you can see that this is a slanted resistance line right here, and this is also a slanted support line. A bull flag is measured like this: the flagpole and also the slanted support and resistance. To find the price target of a bull flag, you would have to take the flagpole right here and put it at the point of breakout at this particular region, and as you can see, the price continues to go in the upward direction, and the target of this bull flag was easily met. Alright, so if you had placed a trade at this particular point based on this chart pattern, you would have made profit to the upward direction, because bull flags are mainly bullish patterns. I am also going to show you an example of a bear flag, which is the opposite of a bull flag. Now let's go forward in price. This right here is an example of a bear flag. There was an initial price crash to the downside, and soon after a consolidation before a further continuation to the downside. When you see such pattern, this can be an example of a bear flag. Now let me show you exactly what I am talking about. This is a slanted resistance line to the upward direction in a bear flag. The support line would be a slanted trend line in the upward direction, just like this. And when you want to draw the flagpole from the high of this candle all the way to the low, this right here is the flagpole of this bear flag. Now this pattern is a bearish pattern, and the price would continue to go lower when you see this kind of pattern. For example, if I take this flagpole, I would have to put this at the point of the breakout right here. You can see that after the price broke below this potential support level, the price continues to go in the downward direction. So basically, if you had placed your trade at around this level, you would get a chance to make profit at a lower level. So this is basically how this pattern works. Now let me show you more common patterns that you can see in the price chart. Let's go forward in price. This right here is another common chart pattern that you can see in the price chart, and this is called a symmetrical triangle. Symmetrical triangles are basically neutral patterns, which means that it can either break to the upward direction or to the downward direction. So this is an example right here of a symmetrical triangle, and in this example the price broke in the upward direction upon completion of this pattern. As you can see, a symmetrical triangle would have a slanted resistance line to the downward direction and also a slanted support line in the upward direction, and upon completion of this pattern the price can either break to the upward direction or to the downward direction. As you can see, if you had placed your trade at this level, you would have made profit in the upward direction. Let's go over to another example in the price chart. This right here is an example of an ascending triangle, and this is mainly a bullish pattern. That means price tends to break in the upward direction upon completion of this chart pattern. This comprises of an horizontal resistance and a slanted support line in the upward direction. You can see this clearly. This is basically an ascending triangle where the price of an asset makes higher lows in the price chart. As you can see, when the price touches this place, it gets rejected, comes down to make a low, goes up, gets rejected, comes down to make a higher low. When you see this kind of price action, you can easily draw an ascending triangle, and upon completion of this triangle, the price would break to the upward direction. You can see the price continues to go higher in the nearest feature. This is basically an example of an ascending triangle. Now let me show you another common chart pattern in the price chart. This right here is called a rising wedge, and it comprises of a slanted resistance line in the upward direction and also a slanted support line in the upward direction. When you see this kind of price action, this shows a rising wedge, and a rising wedge is mainly a bearish pattern, because as price goes in the upward direction, when the price breaks this support line right here, the price tends to go lower. There are various patterns that you can see in the price chart. In this chart pattern overview, I have showed you the rising wedge, the falling wedge, the bullish pennant, or you can call it the bullish flag, also the bearish flag, the symmetrical triangle, and the ascending triangle. Right now, I am going to show you a few more chart patterns that you can see in the price chart. This right here is an example of a descending triangle. You can see that there is a slanted resistance line in the downward direction and there is an horizontal support line. This right here supports the price, as you can see, as the price goes in a tightening effect, and this is mainly a bearish pattern. That means most of the time price tends to break in the downward direction in a descending triangle. After the completion of this pattern, the price broke in the downward direction right here. This is another common chart pattern that you can see in the price chart. Before I end this video, I am going to show you one more common chart pattern that would help you in your trades. Now let's go forward in price. When looking at this price chart, I can easily draw another chart pattern. In trading, there is a pattern called head and shoulders. I am going to show you exactly what that means. If you take a support line from this level all the way to this level right here, you can easily see a chart pattern in the price chart. Now this is called a head and shoulders. Right here in the price chart, this is the left shoulder, alright? This is the head and this is the right shoulder. And this pattern is basically a bearish pattern, which means that by the completion of this pattern, the price tends to break in the downward direction. This right here is called a head and shoulders. And the opposite of this pattern is called an inverse head and shoulders. That means that inverse head and shoulders would be a bullish pattern. If we go over to the chart pattern overview, you can see right here, the price makes a left shoulder, a head, and a right shoulder, and breaks to the downward direction. If you look at the next chart pattern, this is an example of an inverse head and shoulder. This is a very common chart pattern in the price chart, and it can help you identify potential price reversal in the chart. I would urge you all to go over to TradingView and look for various chart patterns. You can easily plot them out by yourself by basically looking at the price chart and identifying various support and resistance. So when you connect a potential support to a potential resistance, you can easily find any of these patterns. Right now, I am going to show you a quick example of how you can enter a trade upon confirmation of a particular chart pattern. If you look at this closely, you can easily identify potential support and potential resistance. You can do this yourself right now. When you are done, the chart pattern would look exactly like this. You can see right here, this is a slanted resistance line in the downward direction and also an horizontal support line. This right here, as you can see, is a descending triangle. And like I said, a descending triangle is a bearish pattern. That means upon confirmation of this pattern, the price tends to go in the downward direction. You have to wait for this support line to get broken before entering a trade. And if this is to play out, I am going to show you the potential price target. From this candlestick high right here to the potential support, I would then take this line and place it at the potential point of breakout. You can see right here, if the price breaks this horizontal support, then the price would go down to this level and you would be able to make massive profits. From this level all the way to the potential take profit, you can see that this is over a 14% move in the downward direction. If you trade with leverage, then you can make more money with less. For you to enter a trade, you need an exchange. In this video, I am going to use the Bybit exchange, and you can use my link in the description of this video to get amazing rewards when you sign up as a new user on the Bybit exchange. If you want to place your trade upon confirmation of a particular chart pattern, right here I am going to go over to derivatives. This section, click on USDT perpetual and select the coin you want to trade. This right here is where I am going to enter a long position or a short position. If I go over to the right hand section, you can see right here I can either enter a limit order, a market order, or a conditional order. When it comes to chart patterns, you can use the limit order or the conditional order. The next step would be to place your order price and the quantity that you want to trade. You can do this using leverage. If I click on this section right here, you can see that I can use from 1x leverage to a 100x leverage in my trade. And I can set my leverage for a long position or a short position. If you're an experienced trader, then you understand what cross margin and isolated margin is. For me, I use cross margin because this uses the entire balance in my futures account to keep my position opened. Alright? But if you are a new user and you are just starting out trading, it is best for you to use isolated margin. This would only use a specific amount in your futures balance to keep your position opened, so you won't have to lose a lot of money in your trades. And also, when you are using leverage, please keep the leverage to a minimum. You can use from 1 to 5x leverage. This is very reasonable as a new trader. You should know that trading is very risky and it is advisable for you to have a bit of knowledge before you start trading. In my next videos, I am going to be showing you exactly how to trade, how to understand technical analysis, and how to make more profits in your trades. If you like this kind of content, you can please give this video a thumbs up and try subscribe to the channel. If you want to use the Bybit exchange, my link is going to be in the description of this video, where you can get amazing rewards as a new user. And if you have any questions, you can drop them in the comment section. I will try answer all your questions. With that said, this is going to be it, and I will see you in the next video. Goodbye.